$200 million, 200 million in a day. Some guy comes in and buys 200 million of physical silver on the COMEX. I don't know what happened in the LBMA because you never seem to know what's going on over there. And of course, we got the Shanghai Exchange. And of course, silver went up 5% 2 days ago, went up 1% overnight tonight. It's been a very important market. We took their inventories from like a million kilograms down to 500,000 kilograms.
What's going on, everyone? Welcome back to the channel. If this is your first time here, you're in for a wild ride today. So Eric Sprott just laid out one of the most aggressive silver calls I've heard in months. He's talking about silver hitting $300 an ounce, and he's backing it up with some absolutely fascinating data about supply restrictions, physical demand explosions, and why the paper manipulation game is finally breaking down. But here's the kicker. He also reveals why mining stocks haven't moved yet, despite these massive metal price gains, and what that means for the setup heading into this year. You're definitely going to want to stick around for the entire breakdown because the third section gets into some insider knowledge about how these mining companies are actually structured and why some of them are destroying shareholder value without even realizing it. And hey, real quick, drop a comment below and let me know where you're watching from. I love seeing where everyone's tuning in, whether you're in the States, Canada, Australia, or anywhere else around the world. Always great to connect with you guys. All right, let's jump straight into this.
And I don't need to justify, 10 or 12 major banks have been short the whole market for that whole time.
Yeah.
Why are those banks short the silver market? Okay. Yeah. Is there a reason for that?
They're hedging.
No. They're not hedging. We know that. Nobody hedges anymore. There was an excuse 20 years ago. So I can believe that it's gold silver should go back to 15. Okay. It's only mined at 8-1.
Right.
It's in the Earth's crust at like 10 or 11-1. Why the hell should it have traded at 100-1? And it's already down at 67, 68-1. I think it's going right to 15, 1 to 15. Okay. So let's say if the gold price is 4,500, which is near, makes the calculation easy. Silver should be at $300. That's where it should be. That's without a physical shortage. Okay. Now we throw the physical shortage on top, and the shortage of silver stocks to buy. I mean, the runway is so wide open that I can see nothing but clear sailing for silver. It might have times when it gets beat up. And I always find it hilarious watching silver trade on the COMEX. And, they have these 10-minute bursts to the downside.
Yeah.
Bang, 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 bang.
Yeah.
And a half an hour later, it's right back up there.
Mm-hmm.
And what is that guy trying to do? Is he setting off stops or something? Or I don't know what they're doing.
Yeah.
But they never win that thing anymore when they're banging it down. They don't win those things. They lose every damn battle. I don't know how it works out for them. Maybe they are setting off stops and they're buying, getting guys to stop out on their longs. But it never seems to hold together. I mean, if you did that for a living you're in the investment business, I don't think you'd be in the investment business very long. We have done so differently this time. And of course, any student of silver realizes what's happening here when you see the nomination for deliveries almost every day on the COMEX, physical delivery, new. Like I think yesterday overnight, there's probably something like 70,000 new ounces demanded. That's $200 million, 200 million in a day. Some guy comes in and buys 200 million of physical silver on the COMEX. I don't know what happened in the LBMA because you never seem to know what's going on over there. And of course, we got the Shanghai Exchange. And of course, silver went up 5% 2 days ago, went up 1% overnight tonight. It's been a very important market. We took their inventories from a million kilograms down to 500,000 kilograms. It's inched back up here to, I don't know whether the number's 700 or 800,000, but I noticed it went down yesterday. But, the Chinese, and this is a point, have said that as of Jan 1st, we're not exporting any silver.
Right.
Unless you get a permit. And they were big exporters, okay?
Right.
So that could be 50 or 100 million ounces that's not coming out of the market.
This is the conversation every silver investor needs to hear. Eric breaks down why silver should be at $300 an ounce, and he's not throwing out random numbers. He's talking about the gold to silver ratio that's been distorted for decades. Silver is mined at 8 to 1 with gold. It exists in the Earth's crust at 10 or 11 to 1. So why has it traded at 100 to 1? Makes zero sense. Eric says it's going to 15 to 1. And if gold hits 4,500, that's $300 silver. That's reversion to geological reality. Here's what makes this explosive. Those 10-minute COMEX price smashes, they never win anymore. The manipulation is failing. Physical demand is overwhelming the paper games. $200 million of physical silver bought in a single day? That's panic buying from someone who knows what's coming. Then China restricts exports starting January 1st, potentially 50 to 100 million ounces removed from global supply. The runway for silver just got way wider.
Well, there's no doubt that, as you know, both London and New York, until a few years ago, hardly ever had a delivery. What's a delivery? They never delivered anything.
No.
Okay. COMEX and the LBMA didn't have deliveries.
Yeah.
Well, of course, Shanghai's always been, it's a delivery market.
Mm-hmm.
And of course, they're the largest provider of silver, and they're the largest consumer of silver, although the Indians are giving them a run for their money, okay? So, yeah, no, that's going to be the nexus of where things will be determined in the future, for sure. And they're the biggest users of silver. You know, when it comes to like solid state batteries, it's all Chinese dominated. I know your president's trying to get some plants built over here. We'll see whether that works or not. But I mean, they have the facilities already. So they are going to determine the price. Asia will determine the price for sure. Well, I think that would be a big risk. Although when I listen to Michael Oliver, who's a student of markets, okay?
Yeah,
he's more of a student of markets than I am. And he points out that in a number of those markets where it went down, it went right back up again. Some that hardly even went down, but it always went right back up again. And we've had a time, we had a lull in the mining stocks here. I think it was in October, came right back up again, right? So I think that, I think that the fact that people realize you got to shift from paper to physical, that will provide a real buttress for the gold and silver if the market starts fading. So even yesterday when the market got beat up pretty good, gold and silver did okay. Silver was way down and came up, and gold went up. Today we've got the markets doing very well, and of course now gold's starting to run here. Silver, which was down, is almost back to break even. So I think that people will see through this and hold in there, because, you know, if they're trying to go from 1% to 2%, that's a lot of buying.
Right.
I like to think that maybe I already own 0.1 of 1%.
The power shift in precious metals pricing is something most investors are missing. For decades, London and New York set prices through paper markets. But Shanghai? Always been a delivery market. And now, they're the largest producer and consumer of silver. Asia is determining the price now. When silver jumps 5% in Shanghai and Western markets react the next morning, that's where real price discovery is happening. Physical demand in Asia is driving this market. What could derail this? Stock market crash. But Eric references Michael Oliver's work. In past crashes, precious metals dipped briefly, then recovered fast. October 2024, mining stocks had a lull and bounced right back. People are shifting from paper to physical assets. Then there's Morgan Stanley suggesting 60-20-20 allocation with 20% in precious metals. If institutional money reallocates even a fraction, hundreds of trillions, into a $2 trillion market cap sector, the math gets absurd. The supply doesn't exist at current prices.
I want to comment on, you asked about going from 25 to 26, and we had these big gains. And Eric's thinking today is, we've had big gains, but the stocks are way behind the prices in my mind. I mean, I think we got 30% upside here with the prices doing nothing. Just report the earnings. Like we've had these prices go up and the stocks haven't followed.
Right.
They haven't done as much as because it's not the percentage. Like should never expect that gold goes up 25% and the stocks go up 25%. No. If the gold goes up 25, stocks would probably go up, 2 to 5 times that amount, i.e. 50 to 125%. We're not getting that. The last move in silver, we haven't even got it in the stocks yet. I think there's still short selling and naked short selling going on in the junior miners because it's easy to do it. How do I know that? I own lots of junior miners. I look and see what the stocks do at the close, and they get forever. Some guy comes in and knocks it down in the last 5 minutes.
Yeah.
Like, what are we doing here?
Yeah.
Like, why always at the close? Okay. And I'm sure it's predatory selling. And particularly when you see something going down quickly, which we see a lot in the commodity trading, right? There's not a time when gold goes down slowly. When it goes down fast. Or silver goes down fast. Now they'll move it down $2 in a day. The first $2 move on silver I saw was to the downside, not the upside. I can tell you and our listeners, when I make an investment in a company that's doing an issue, I say to the banker, I don't want any hedge funds in this issue. I don't want this going to some guy who's just trying to cream something off of this stock who doesn't give a damn about anything else. Okay?
Right.
I want it clean. I want to know who the other buyers are. Tell me it's me and 2 or 3 other guys. We'll all pony up the money and nobody else. We don't want the free riders in there. Okay. The guys who are going to immediately sell the stock and keep the warrant. And then we got to eat the stock too, right?
Right.
And to the managements piss me off. Okay. There's so many managements that will sell a stock. They sell it 10% below the market. They lose as much market cap as the money they raised. In other words, the stock just went down 50 million and you raised 40 million.
Right.
Well, thank you very much.
Right.
Who wins in that? And you want me to buy it. I already own it. I'm already losing 10% on it. You want me to be the buyer. It's a killer. The management's got to get tough here.
Right.
These guys want your shares. Buckle up, boys.
Here's what's frustrating investors. Mining stocks are way behind metal prices. Eric thinks there's 30% upside just from stocks catching up, even if metals do nothing. Historically, when gold moves 25%, mining stocks should move 50 to 125%. You're not seeing that. Why? Ongoing manipulation. Naked short selling in junior miners. Eric watches them get knocked down in the final 5 minutes of trading. Classic predatory behavior triggering stop losses. But here's the insider knowledge. Eric's playbook for private placements. No hedge funds in the deal. He wants 2 or 3 serious long-term investors. No free riders who sell the stock and keep the warrants. And he calls out management teams destroying shareholder value. When you sell stock 10% below market, you lose as much market cap as money raised. Stock drops 50 million to raise 40 million? Insane. Management needs to get tougher. The demand is real. Stop giving shares away at discounts. These guys want your shares. Buckle up. So what do you guys think of this? Leave your thoughts down in the comments. Please like and subscribe, and I will see you in the next video.